And welcome to BQ Prime. Joining us today is Mr. Guruprasad Srinivasan. He is the CEO of Quess Corp, and Kamal Hoda. He is the CFO of Quess Corp. They're speaking to us a day after the company declared its second quarter results, where the net profit jumped 47% to about 71 crore. Revenue was up 3.2%. The EBIT margin expanded from 1.85 a quarter earlier to 1.97%, a significant jump there. Gentlemen, welcome to BQ Prime.
Thank you, Tushar.
Thank you, Tushar.
So, first of all, Mr. Srinivasan, according to the statement that you issued yesterday, and I may quote you, our consolidated efforts have started to yield positive results to help us realize non-linear growth from our all-weather business model. What is this non-linear growth that you're talking about, and what is driving the profit overall?
So, Quess operates under three platforms: workforce management, technology operations, and integrated asset maintenance. Two of our platforms, GTS and OAM, delivers a higher EBITDA margin, and all the efforts that we have put in last couple of quarters has started, helping us in terms of the building, the scale, the operational efficiency that we have brought in, and the digital processes in terms of delivering quicker, faster results to our customers has helped us to scale the revenue better while keeping our costs low. On a year basis, both the platforms delivered about 23 to 26% of EBITDA margins growth. So this is a big call out for us in terms of how high margin business are now playing into our overall revenue percentage since when we have made investment into these platforms. So just to little elaborate, under GTS, we have two kind of services that we do. We have Connect Business Services and we have AllSec. Under Connect, we do voice and non-voice BPM, and we also do a collection business, which is it's a field for business, and followed by with AllSec, run two kind of operations. One is we are the largest HRO service providers in terms of we process almost about 1 million. Both international and domestic. So, our revenues from international is also increasing in these segments. So, which is what is contributing us overall healthy margins in these two platforms for us.
All right. So you're also bullish about the future. So how is the rest of the fiscal looking like in terms of this revenue trajectory that you've achieved?
So, seeing now is we are a steady state business contribution which is coming into, and we have been able to sustain the revenue margins where we are about we are between 3.4 to 3.7 for consistently for 4 quarters. 2-3 aspects that's going to play around in this to get better over coming quarters is we have made an investment in a platform in our product-led business named Foundit.com, which is now turning, and from that time we have made investments. This particular platform is almost about 6x of its investment that we have made. The revenues are clocking well, and our burn is coming down. And in coming quarter, it's going to further by exit of 4, we are going to be almost break even. That's going to pan out well in terms of how the margin upliftment can happen. Plus few other investments that, specifically IT sector has been down in terms of our workforce. Little bit of turnaround there, which we don't see in Q3, but of course, Q4 and early Q1, it should start, coming in back. That is going to help us to, get better margins. Plus OAM in itself is growing very well. We are able to grow the platform well, our food business, our security business, and telecom infrastructure business where we are into, which is also doing phenomenally well for us. So between these three platforms, I think we are well pegged to slowly, improve our margins starting from early FY25.
Okay. Hold on to a thought about the IT sector hiring bit. Coming to you, Mr. Hoda, you mentioned the profit includes a deferred tax credit of about rupees 13 crore in the quarter. Can you please explain what is this deferred tax credit for this quarter?
So this is primarily on account of timing differences between accounting profits and profits. The ETR that we have for the current half year is around 15%. And basically the profit mix of all the businesses that we have, we anticipate the tax rate on a full year basis to be in the range of 17 to 18%.
So, secondly, your margin expansion is commendable given the nature of the business that you are in. How do you plan from your end, from the CFO's role? How do you plan to maintain or shore this even higher?
So yes, see if you look at the performance for this quarter, the performance and the growth that we have seen both year on year and quarter on quarter across all platforms, makes us believe that there is a lot of sustainability in terms of these performance. Workforce management, the EBITDA has grown year on year. GTS, the EBITDA has grown 23% year on year and just crossed 104 crores. OEM platform, the EBITDA growth is 26% year on year, and found it also in the product-led business. The burn has come down by close to 18%. So, as Guru mentioned in his speech, it's an all-weather business model that we are into, and the good thing for us is, all these platforms are doing, in terms of our AOP planning, whatever performance targets that we had set for these businesses, they are pretty bang on those targets for this H1.
Okay. Coming back to you, Mr. Srinivasan, there were two acquisition moves during the quarter. One, you increased your stake in Vedang Cellular, and you completed or acquired almost all of 100% of the Stellar Slog Technovation. So what are these? Are these moves towards inorganic growth for the company? Secondly, you have also talked about the outperformance of the all-sec technologies. So what are these inorganic synergies that is coming in? Are you seeing those synergies coming in?
So let me take the first question in terms of Vedang and Stellar Logs. See, Vedang is an investment that we made way back in 2018. It's into the telecom. On back of 5G, they are doing phenomenally well in terms of their AOP plan. They are ahead of their AOP plans, the way they are operating currently with so much of stuff happening into the telecom segment. As part of the position, we did had the put option by the erstwhile promoter who still with us runs this business very efficiently. We are now increasing our stake, and we are taking over 100% over a period of time as and when the put option comes into as part of the share purchase agreement that we had. However, all these are part, I would say, corporate structure simplification that we are also integrating, and Stellar Logs is largely into a gig platform that we had invested. We held about 53% stake. We're just increasing our into console and bringing it as part of our workforce solution and integrate it and power it better to go back as a combined solution to customers.
Okay. Finally, we come to the last question about IT staffing, which I mentioned. We'll talk about it later. The industry is in a downturn in terms of both onshore hiring as well, on-campus hiring and off-campus hiring. Large part of your business is not exposed to that segment, but you still are seeing some pain. So what is the picture looking like for the rest of the fiscal, the next 6 months, and say, for example, in the first half of the next fiscal, sir? Mr. Hoda.
Sure. So you're right. It's as part of the workforce, IT staffing is one of the division under which we have roughly about 6,000 people that we deploy. So it has, IT staffing has three set of requisitions that comes from. So one part is all about GCCs. The second part is all about IT services, and the third part is non-technology companies hiring technology talent. So I'll cut this into three buckets. IT services, absolutely, you are hearing from the market, and we all are witnessing there's no much of being opened, and we are not anticipating any major push even in Q3 and Q4 as where we are today. But where is our demand coming currently is largely from GCCs. There are about 1,000 plus GCCs. There are A, expansion of GCCs, B, there are new GCCs which are entering into the country. So we are doing some level of hiring into that space. Plus non-technology companies. There's a lot of digital happening within the country. Like bank, you have fintech activities going on. So there, in that space, the non-technology is hiring tech talents for their own enterprise applications and all of that. So we are seeing demand coming in from there. However, IT services definitely is a volume, comes from IT services. We are at the moment, I would say that we are down by 50% in terms of demand.
Okay.
But we anticipate this to start coming back from probably Q1 of early next year.
Okay. All right. Thank you, gentlemen, for those insights. Pretty helpful, I must say. Congratulations on those numbers, on the profit as well as the margin. Thank you, viewers, for tuning in. This is Tushar for BQ Prime.
I wish everyone at BQ Prime a very happy Diwali and very festive season ahead. And thank you very much for having me here. It has been a pleasure to be here with you.